I'm Alan Kenny, Managing Editor with REIT.com, and welcome to the latest edition of Fundamentally Speaking with Calvin Schnure. Calvin, thank you for joining us. I want to talk a little bit about the macroeconomic outlook. There have been a lot of factors out there that are kind of muddying the waters. Can you give us an idea, kind of where things stand right now?
Probably the most important number, Alan, is the employment report. We recently got the November jobs report, and it showed a gain of 146,000, which is about in line with expectations. There was a bit of downward revision to the November numbers, but overall, it's steady but unexciting growth. But to take a little bit longer perspective, this is a big turnaround from where we were 3 or 4 months ago. If you remember, at that point, people were worried in late summer whether we were headed towards a double dip. If you look at the year to date, we're a little bit ahead of where we were in 2011. So it looks like we're on track for continued progress.
Calvin, we've seen some improvement in the job market, but we're a long way from normal. Should we be worried?
Overall, we've seen a total increase of about 5 million jobs since the economy started to turn back up again. Now that's more than half the jobs that were lost, but still it's a long way to go from being back to normal. But within those numbers, there's some other trends. For one thing, the report says how many people are part-time employed for economic reasons. They can't take a full-time job. They can't find a full-time job, but would want a full-time job. That's fallen by 1.25 million. So the 5 million increase in total jobs also has 1 million people, 1.25, who've gone from part-time to full-time employment. That means that you are having more people getting into the jobs that they want than the overall figures show. Another factor going forward, if we look here, this shows the increase in temporary work. Now again, temp work is not the sort of work that people would like to have. They'd prefer to have a permanent job, but many firms will hire a temporary worker while they're seeing if their demand is strong enough to justify a full-time employee, or while they're searching for the right person. And you can see in this chart here that temp work has increased and is fairly solid compared to what it was over the past 10 years or so. And what this suggests is that the hiring we're seeing is going to be maintained going forward.
So tell us, what's the outlook for 2013?
Well, the near-term outlook, everyone is worried about the fiscal cliff. Right now in early December, mid-December, that's the big news. And I'm not going to try to handicap the political process, but let's assume they do come to some agreement. We all are hoping that they come to an agreement. Now, whatever agreement they have is going to have some combination of higher taxes and lower spending. And that's really, there's no way to avoid that. What that's going to do is help slow the economy. That's going to slow the economy a bit early 2013. So we shouldn't be expecting really any acceleration in the first couple of months. In fact, there could be some slowing as people get used to these higher tax rates or the drop in spending. But that'll pass. That's something that's going to affect the first half of the year. We should expect to see some gains in momentum in the second half of the year. And indeed, I would expect the economy to get back to 3% growth or faster going forward.
Calvin, I'm hearing a lot of glass half full talk there. Tell me, what does that mean for commercial real estate and REITs?
Well, you're right, it is half full. We're seeing some improvement. It's not an exciting recovery for commercial real estate. And the two factors that are going to be really important are, first of all, if the overall economy does get up to the speed with the types of growth that we had before, and we really should expect that. The other factor is looking at what's the new supply that's coming online. Let's take a look at the slide here. This shows construction expenditures. This isn't starts in units or anything like that in projects. This is the actual dollars spent, and it has it for office, retail, and multifamily. It shows in billions of dollars how much new construction activity is going on. And you can see that in any of these three property types, we're well below where it's been for almost 20 years. Very reasonably, most developers cut back quite a bit on their projects in the midst of the recession, and many of them haven't started up again. We are seeing some improvement in multifamily. Of course, there are a lot of stories about multifamily supply coming along, but this chart shows the reason why in the overall national picture, new supply is really not a worry. So you put these two features together, the economy continuing to gather speed and new supply really lagging behind. And what that suggests is the commercial property across most property types should be seeing rising occupancy, rising rents, and rising prices. So for a long-term investor, commercial real estate still looks to be a fairly good proposition.
All right, well, thank you for joining us, Calvin.
Thanks, Alan.
And for more on this and other REIT news and analysis, be sure to check out REIT.com.